and welcome. This is Agam Vakil and you're watching the FNO show. In this show we take you through all that is happening in the futures and options space in the Indian equity markets, and markets are heaving a sigh of relief. For how long? We with us Ajit Mishra, SVP Research Religare Broking, and Bhavin Mehta. He's a VP of Derivative Strategies at Daulat Capital, who joins us on the show. Good morning to both of you and thanks for joining in. Ajit, I start with you on the way forward. Does it now look that we are finally out of the woods? And does it now look that we're finally done with the correction? Or do you still think that there could be a little bit more left?
Yeah, good morning, Agam. So, Agam, I also hope that, this correction which we are seeing for almost several weeks now, and with almost over 11% kind of a correction that we are seeing in the index, also that we are at the critical juncture of the long-term averages when it comes to the benchmark indices. At least some rebound, some respite is definitely needed, for the bulls to take a breather, and that is what we are seeing in today's session. And of late, Agam, these two key sectors, basically IT and banking, they are trying hard to, trigger some recovery or rebound, but unfortunately that the other index majors, they have some other plans and market is still looking lower. But considering the rebound that we are seeing today, especially in the IT and banking majors, there's a possibility that we might, witness some recovery first after this, corrective phase. But sustainability is something which seems difficult at present. So we are just saying that it's a rebound or recovery that markets are currently offering, and maybe closer to 23,800, 24,000 zone is something that will continue to act as a strong resistance area. The participants should align their trades accordingly. If you have a very short-term view, then one can consider 23,600 call, which is currently quoting at 159 as a buy trade with stop loss at 70 and position target of 300. Banking, though it's playing a critical part, but we are very closer to the resistance zone, close to 51,200 is a very strong resistance area, both in terms of technical parameters and derivative parameters. So I feel that among these two indices, Nifty is something that we can definitely look at for fresh position.
All right, fair enough. Bhavin, with that, let's talk about stocks which are on the radar of our experts. So, Ajit, stocks that are looking good to you?
So, Agam, IT definitely is something that one should be focusing on, wherein we are seeing consistency in the trend. And within the IT pack, the IT major enforces, after this recent correction, we have this comfort of multiple supports around the current area. So the risk reward is favorable. So one can go long at current levels with 1830 as a stop loss and 1920 as a target zone. Another stock that we like is PowerGrid, and as a disclaimer, we have recommended this to our clients also. And we are eyeing 344. It's a consolidation range breakout. It's doing comparatively better. The stock is inching towards record high as well. So everything is aligned for a near-term positive tone to continue, with 344 as a target area and 323 as stop loss.
Okay. What about you, Bhavin? Next one, and I guess we have time for only one more. This one is on Sun Pharma. I will take this one with Ajit. We have Ankit from Mumbai. He holds the Sun Pharma 1800 call. He's paid a premium of 15. Wants to know what can the outlook be for this one. The Sun Pharma 1800 call paid a premium of 15, sitting on a potential loss. And the thing is that because it's the last week of expiry, time value is going to catch up substantially. It's but 30 points short of going in the money, this particular option. And again, pardon me, the spot is at around 1770, so 30 points short. It does seem like it's going to be a little bit of an uphill battle, even though the underlying is not too far away from going in the money. But Ajit, what's your opinion on this one?
So, after 2 days of rebound, we are seeing a pause in Sun Pharma around 100 EMA, and there is a possibility, as you rightly mentioned, that the stock might witness further recovery if it manages to hold this level. So I would recommend him not to wait for long since we are in the last week of the expiry, and 1760 spot should be your stop loss for this position. If we manage to break 1785, then you can definitely hold for 1820 as a target zone. In that case, you can maintain your stop losses, trade your stop losses to 1800 and hold.
Okay, on that note, thanking both our experts, Ajit and Bhavin, for joining us and taking us through their views on the markets, and of course helping us with viewer queries as well. With that, it's time also completely out of time on this edition of the F&O show, but lots more lined up on the other side. Stay tuned to NDTV Profit.